welcome to the Humble Investor Bull Bear Market Report for April 30th, 2018. My name is Adam Straseske, and I'm so grateful that you're here today. So here's what we're going to cover. We always start with the broad market readings, and then we're going to get into this week's operating plan. So am I worried about a bear market? No, not right now. Until we get the S&P 500 and the MSCI All World ex-US Index underperforming Treasuries on a 12-month rolling basis, we're not in bear market territory. So no, do not worry about the bear market right now. When that relationship changes, then you want to have an action plan in place. Right now we're on a risk-on stance though on the longer term. As far as correction risk, yeah, of course there's always a risk of correction, but right now it's probably a little bit higher than normal simply because we're in this trading range. And the fact is that the longer the market remains in this trading range, the more are the odds that it's a 50-50 split about which direction it can go. So the breadth is really not telling us too much. We're not in oversold or overbought territory, and there are no positive or negative divergences or reversals to speak of right now. Here's another look at the S&P 500 in a weekly chart. You know, last week we had this basically neutral week off of this buy signal. Bulls couldn't get much action, and so the bears gave it a shot, and now the bears can't get it much action. So it was another neutral week in the S&P 500, and you can see right here we've got this channel line going down, we've got a channel line going up, it's a triangle formation. So we'll see which way it breaks. More than likely the bulls will have another shot to the upside simply because we had such a large run in the market, but the bears could always break it to the downside. So right now on the weekly, again, the longer it stays in this trading range, the more chance to of a neutral 50-50 shot to the up or downside. But right now, give it to the bulls. Here's our operating plan. Still like preferreds and large caps in U.S. growth for the monthly trender. And then here's a look at our weekly swings. So we got stopped out of the international government inflation protection bonds. Hit our stop and we got out. We have these remaining and no scalps. So here's a look at the U.S. large caps and U.S. growth. Basically, neutral week for them. Looked very similar to the S&P 500. Just got the channel outlined here for you, and then also the trading range. Here is a look at oil, down 0.44% for the week, and we adjusted our stop up right here. We started with the stop way down here, and we've adjusted it up to move along with price action. Here's a look at Treasuries. Buy signal for Treasuries at double bottom. And the bad thing is that it's going against the trend, so it's a lower probability buy signal. Nonetheless, it is a buy signal. Australia up 0.31% for the week, and we're in this bear channel right here. And hopefully we get a move to the upside this week, but we did adjust the stop up to lower the risk of the position and the overall portfolio. Brazil down 0.33% for the week. We adjusted the stop up in this one as well. Basically a neutral week for Brazil, and we'll see if we can get some upside action this week. Still within the channel, but barely the bulls are holding on here. And here's the MSCI EAFE Value Index, down 0.27% for the week. Neutral week for it as well, but really like this bullish action right here. And possible double top. So this is a weak sell signal. And what we'd like to see, of course, is a strong break if it does break to the upside right here. A strong break closing on its high. And no new positions as far as the monthly trender for the weekly swing. Then we like global wind energy. And this isn't a perfect correlation on this index with the actual exchange traded fund that we're going to trade. but it's close enough where I think it, with a little bit of imagination, you can see what we're looking at. So essentially, what we've got is a breakout to the upside, and it's closing on the high for the week. It's about the third or the fourth time, depending upon how you count it, which we tried to break through, and it didn't do it. So we're thinking that this time it will. And it closed on its high, so it looks pretty good. It's about a 3 or 4 year price range, trading range that we're coming out of, and so there's some real potential there. And the way that we're looking at it is we're going to buy some positive action this week, and if in fact we do buy and it does fail and comes back into the trading range, then we're going to look at buying at the lower end of the trading range and then a stop below that trading range. So again, it looks pretty good for global wind energy, and we'll get in that this week if we see some positive price action. And that's it. So with that, have a great week, and we'll talk to you next time.